I was talking with a trader, and that included an exchange of charts back and forth. That's not something I usually do, but considering this person's a friend, I made an exception. Now, the trade was based on a confluence of major turning points and a few other factors. Thinking that this was a probable place of a trading decision, I was looking out for a move. But what that move would be, though, I didn't know. But taking a range out of the equation, price would either bounce or price would break the zone. Now, the exciting thing for me was this grasshopper, he was watching the same zone, so I knew that they've picked up on something during our talks. The difference, though, was that he took a loss on the trade and I took a win. Let me show you the area that we were looking at for a trading decision. Now, we saw price break down from this area, and we also had other variables not included on this chart. Price rallies back up into the zone for a trading opportunity. Now, my friend shorted in the zone, and he was quickly taken out of the trade. Now, his reasoning was sound until it wasn't. So he saw smaller candles forming, which indicates a loss of momentum. So when the larger candles showed up, he reasoned it was just suckering in the longs to take them out once price reached that zone. Now, that wouldn't be the first time that's ever happened. But my reason for not shorting but playing a bounce long was also sound. It was a high-profile trading zone which would have interest for other traders, and I didn't presume to know what the larger candles were doing except buying a lot, and I just waited for the market to show its hand. Now, the playing field changed as soon as those small candles were erased by that thrusting price action. Now, for me, when price is rallying with strength into a zone of interest, it raises a red flag. Knowing that there would be orders at the top end break of the zone, if I was able to move the market, I would use this strength to take them out, and that's what happened. Now, there was still no trade for me yet. I watched price drill the zone, and I just waited to see the retest. The retest was muted in strength compared to the breakout of the move. I anticipated a bounce because of that, and the bottoming tail into the zone was the entry area. But here's the kicker. I was open to a failed breakout short, but that all depended on the breakout itself, including how price retraced back into the zone. If it retraced with strength, no long play. Retraced with weakness, long play. The difference between the two traders was I was turned into a changing game without a preconceived idea as to why. Now, while I don't know the reason for buying, I did know that zones, especially higher time frame zones, they have price interest on both sides of the coin. The momentum to the upside was simply a red flag that buyers may be gunning for what lies around that zone. So that forces a wait and see attitude, just sitting on the hands. Now, as you can see, the bears did not have a chance when the trade started rolling north. Here's a lesson. Trade what you see, not what you think. You've probably heard that before, but I think this is actually a really good visual example of exactly why that's true.